Good morning, good afternoon, good evening, wherever you are in the world. Welcome to the proptrade.com. Excuse me, my name's Stuart. We are going to be live for the main data of the day, certainly the ADP, the private payrolls numbers. Excuse me, I've just had a slice of wholemeal bread, which was not a good idea, was it? And I've just slurped my tea, so excuse me for my incredibly bad manners, but hope you're all well. It's Wednesday, it's the 5th of March, so it's 5/3/23, well, 25, I should say. And dollar's weaker again today. This is the euro here on the hourly chart, continuing to weaken. We've been back over the key 107 yesterday. Those of you who follow me on Discord, we saw we entered on the end of day yesterday. A massive candle yesterday. If we look at the daily candle, and many people think, you know, we had a big day here on Monday as well. Huge candle yesterday, over 100 odd pips here. We went from under the key 105 area. See, this is massive psychological area 105 for euro. Many people paring back this anticipation here at the beginning of the year that we were heading for parity. We were going down. Non-farm payroll in January hit this low down here, 101.70 area. We've recovered from that. And it's really the weakening dollar and the aspirations of the Europeans to do something about their own defence, which Trump will see as a as a win. But anyway, euro continues to accrue. Huge 100 pip plus move yesterday from 104. Sorry, break of 105. Strong, big-bodied candle. Remember, size matters with the bodies of the candles. Over 105. Sorry, over 105, breaching 105, breaching 106. We got in at the end of the day yesterday, and we've taken 30 pips initially out of that. And our stop loss is now back up at entry. And I might pull that up later on the day as the trend moves up, because, you know, this looks like a breakout candle to me. The size of the body, very strong. Just here, this is a continuation down candle, big-bodied candle, retraced for a few days, and then we went down. Now we went down again, and there's the bounce here at the end of January, retraced, couldn't go any lower. The breakout here, have this consolidation zone here, and up we go. So anyway, that's euro. So let's have a look. Today we've got, as I say, we've got ADP, the private payrolls number. We've also got services PMIs coming out later on today as well, and we've had services PMIs from the other parts of the world, the Asian markets and the European markets. So I hope you can see the calendar. Let's make my ugly mug a bit smaller. There we are. Excuse me. I had a terrible cold last weekend. Seems to have got better. So positive news out of China this morning. The case in their private payrolls, private company, as private as Chinese companies get. PMI measure, so stronger than expected, 51.4 from 51.8, and expected a little 2-tick decline was expected, but we've moved up. I'll come back to what Trump had to say last night later on. Obviously, that's market moving in itself. Again, another sign of hot inflation, sticky inflation, this time for Switzerland, 0.6 of 1%. It was expected to rise up quite significantly for the February reading to 0.5, but it was hotter than expected, and obviously significantly hotter than the decline we saw in January. So another country that we've had sort of continuing data coming out that, you know, inflation is sticky, it is hanging around, and the central banks, obviously that's the main mantra for most of them, get it down to 2% on an annualized basis. It is actually under that, around about that in Switzerland themselves. But anyway, obviously a big significant player in the financial markets, Switzerland. So I don't know why many of you don't trade the Swiss franc. It's you know, it's a safe haven currency, you know, big influential neutral country in this at the heart of Europe. Obviously big private banking sector, big issue with regard to movements in gold prices and gold bullion. But anyway, story for another day. So the European PMIs, the services PMIs, were a bit mixed this morning. Obviously, the one that catches everyone's eye again is Germany. So it was expected to slip a few ticks to 52.2, as you can see there. It's coming at 51.1. That's a significant decline, unfortunately. Remember, earlier in the week we had better than expected manufacturing data, but manufacturing only accounts for sort of, certainly around about 10%, 8% in some countries, 12% in other countries, but a significant more sector is the services sector, the high tech sector, the accountants, the bankers, people providing services, electricians, plumbers, all those sort of guys as well are wrapped up in the services sector. So it's slipped in Germany. It slipped again quite significantly for the wider euro area, and also in the UK it's coming at 51 as opposed to 50.8 last time. So it's a bit better in the UK. So again, the UK data is sort of outperforming the European data, the French and the German data in particular. The peripheral countries in Europe are doing much better. Spain, not so much Italy, but certainly Spain. Greece are leading the peripherals in the EU area. So in about where are we? 7 minutes time, we've got the private payroll. So ADP, it's a private independent company, and they measure private non-governmental non-farm payrolls as well, ahead of the official government numbers on Friday. So if I just go back, I'll flip over to Forex Factory, you can see the ADP number here. It's been fairly steady. We had that beat last month when we came in at 183,000 from 143,000 was expected. We're back to that 140,000 number this month in 7 or where it is 5 minutes and 27 seconds. It says there. As you can see, it's fairly steady. I mean, it used to be quite correlated to non-farm payrolls on the Friday coming out on the Wednesday. So Wednesday, first Wednesday of the new month is always non-farm payroll, ADP numbers. They recalculated about 2 years ago after a lot of criticism that it was too far away from non-farm payroll, and it hasn't really improved the correlation. So lots of traders used to, if ADP was good, it meant and non-farm payroll was going to be good. If ADP was a miss, it meant that non-farm payroll is typically going to be a miss. That correlation has broken down quite significantly over the last few years. But the point I'm trying to make here is that still 150,000, around about this level here where my line is at the moment, it's still showing the strength of the US jobs market, and that continues to be the case. We have seen some sort of bits of data that are suggesting it's weakening. So this week remains key. We obviously got this data today. We've got the weekly claims, which we saw that big shoot up last week, 20,000 more than expected, 144,000. So we've got that tomorrow, and then obviously we've got the main event on Friday. So we'll be obviously with you for all of those events. So ADP expected around about the 140,000 level in about 4 minutes time. Later on today, well, I've got the Forex Factory calendar up here. You can see the key event of the day for many traders, for me included, it will be this ISM services number. Remember, the manufacturing number on Monday spooked the markets. We had that massive sell-off in stocks, not just on the back of that, but generally on uncertainty. Gold continues to accrue. Yields continue to come down. We're at 2.13. I think we closed last night on the 10-year. Sorry, 4. No, that's not Tuesday. Oh, yeah, 4.21. I'm sure we were down at 4.13 at one point yesterday. Was Tuesday yesterday, wasn't it? Yeah, 4. Yeah, that's what my notes say. So yeah, on obviously all that tariff talk. And remember that Scott Bessent, the new Treasury Secretary, he's come from a world where he concentrates on the Treasury yield. He's talked about that being key for him to focus with a laser focus, as he calls it, onto the getting the yields down. Whether you agree or disagree with his economics and his politics, that's what he's going to do, and he's the man in the chair. Obviously, reporting to his boss, who loves to use the stock market as a barometer of how well he's doing and how well America's doing. But we had a sell-off again yesterday, 1.55% for the Dow. Yesterday, Nasdaq was down 0.35 or 1%. Haven't been down massive. The Dow was down like 700, 800 points at one point. Recovered into close, but still was down, and the Nasdaq recovered all of its losses yesterday. The S&P also closed down yesterday as well. So obviously we had the story overnight that Ukraine had reached out again about the minerals deal or non-deal. But anyway, all of that is really very much in the mix. And I can see here on another one of my screens, Lutnick, the Commerce Secretary, is having quite an intense interview on Bloomberg at the moment. Obviously, the tariffs and real and live, Canada, Mexico, and an extra 10% for the Chinese imports. All of those countries have retaliated. Mexico have said we'll retaliate on Sunday, so it's a bit of a window of opportunity. But yeah, Trudeau was quite forthright yesterday, looking directly at the camera and speaking directly to Donald, as he called him. I've known you for 8 years, Donald. We've worked together. Let's work together again. Yeah. So anyway, non-farm payroll in a minute or two, and services PMIs 52.8 last time, 52.3. Are they going to? Is America going to book the trend like it did on Monday with the manufacturing? Is it going to be better than expected? So this will obviously support things. Oil inventories as well later on, as it's Wednesday. Big drawdown last week, 2.3 million barrels expected. Down in Cushing, the inventories to have gained. Obviously, we've had all that chatter between the US, Saudi, Russia. Really, obviously, oil cannot have been talked about, I would argue, but oil very much clattered into that $70 barrel level over the last few days as well. So euro weaker, sorry, dollar weaker again today. We've just got out on the hourly chart. You can see we're rolling up. So if we just go into this, we're going to have a see what we can do with how the market's going to react to the data. What's going on? Well, as we've just seen now on the hourly chart, euro is bid against the dollar here. This is the 5-minute chart, so a bit more. Should we do it at the minute chart? Let's actually let's do it the 2-minute chart. 2-minute chart. There we are. So we've had a strong run this morning. We're positives. What's this 2-minute chart telling me at the moment ahead of the main data of the day? Well, we've had a good run. We've held 107, or we broke 107 here for whatever this was this morning in European trades. This is between 9 and 10 o'clock my time. We've had another run over 107 here. Now result for the data. Data's just come out, and here we are. Dollar weakening again on the immediate number, and we're back over 107. So excuse me. You can see here what's happened here is that the 50 period moving average is held quite well into the data here. So this is perhaps where your stop loss would need to be if you're going to try and trade this ahead of the data, but we've moved down. So what you'd be looking for now potentially is another test of this level here, 107.12, if this is going to be a positive reaction to the data. And then the next level would be the all-time high, the daily high up here, which is taking us to 107.20. So 107.20 would be a next level if we can get over the immediate target, which would be 107.12, 107.17, this high of the candles here, and then the all-time daily high there is 107.21. So the immediate reaction there after the first 2 minutes of the data coming out, or the first minute, it's a 2-minute candle. It's to the upside. So that looks like a particular buy. Let's have a look at what the data's actually saying. Here, let me just refresh this calendar here, Wednesday. Oh, it's coming quite a significant miss, hasn't it? That's a big headline miss, hence the weakness of the dollar. So less than half expectations, 77,000. That's quite a significant miss for non-farm payroll. So does that mean that ADP non-farm payrolls? So does that mean the main event on Friday is going to be a significant miss? We shall see. But if we look at it's just over half expectations, isn't it? If we go back to the, I'm going to zoom in here. Go back to the, sorry, let's move that down. If we go back to the calendar here, move this forward for the rest of the year. You can see here, so that's a big significant miss, and it's the first big miss we've had for a while, isn't it? Look, we have to go back to really sort of this time last year, February last time, where we had such a significant miss for expectations. So again, that could be, we've seen this signs of jobs starting to cool, and this might be the impact. Obviously, again, the impact of what the Doge is doing, and led by Musk about sort of slashing federal jobs. None of that will be any of this data. These are private payrolls. Remember, it won't be picked up in non-farm payroll. To an extent, it might be, but not much. We'll see. So services, service providing jobs rise 36,000. That's in the devil in the detail there. Let me go back to our calendar here. Where are we? Wednesday. It's not as it updated. No, as usually it doesn't update. It hasn't got any detail in there for me, has it? So be interesting. That's quite a significant miss. Obviously, markets will hold fire until where's Wednesday? It's got all these companies on. With all due respect, I'm not really interested. But that's interesting as well. Last time was upgraded only a bit, 5,000 to 886,000 from that 183,000 we'd had. Yeah, that's quite a significant miss. We see that perhaps see that move against the dollar continuing. It hasn't actually. It's cooled after the first couple of minutes. So here we are. Remember, this is a 2-minute chart. We can see here, guys. So it was positive. So stop loss would be at down there, perhaps here now under the key 107. But it's cooling. It's that initial after there's the initial reaction. Come back, but again, if you were trading this, that's triggered long on that on this crossing MACD strategy with the moving averages. There was support. Actually, yeah, no, they went long on that, but there we go, given back up. So 107 is being tested again, as you might expect, given it's such a round number to the downside. So it's being assimilated. It's probably because of the services numbers better than expected, but certainly euro back under 107 currently. So sterling it's holding 128. Again, this 2-minute chart. Remember, guys, there's the data coming out. So dollar negative in the first couple of minutes of the data dropping. Big surprise. I know it's not surprising given it's such a big miss, but the reaction has been a bit muted, and now the dollar's coming back. And you can see clearly this pound. The cable position here on this 2-minute chart has been short, not all morning, but since 12:40 here, the 2-minute one, having been long here, it was short here, and it remains short. You'd have got out here, but it needs to break back over here if we're going to go long again. Excuse me. Cup of tea time. Any questions, anybody? Please let me know. Out there in social media world, X and YouTube. So we've got resistance here at the 20 period moving average here on this 2-minute chart, but we might see some movement higher. So dollars turning weakening again here against sterling. Canadian dollar 144 again. We're back to that. So 144, the big round number is here. We've been as high as 144.34 this morning. Was that this morning? Let me check. I'm saying that's it's only 2-minute chart. Pretty sure that was the top. Yeah, there we are. Sort of bit range bound between our previous levels. And these are old positions, aren't they? So 144. What's that? 144. Yeah, 144 self right through there, isn't it? 143.93. It's good as smidge or a smudge to the upside. Dollar yen still under the hugely psychological 150. We had a rally into it last night. We had a poke above it for an hour, for a few minutes within that 3-hour time frame, but then we've weakened again in the European session, end of the Asian session, and we found a support today around about 149.20. So we haven't gone under 149 in the European session, but equally we can't get over the key 150 level. So ADP, big miss, 77,000 from an expected of 141,000. Dollars initially weakened on that data, as you might expect. Show you the 2-minute chart for yen as well. There we go. Hiccup on the data, or ahead of the date. In fact, that was not saying that's 13. So, but yeah, another one to the downside. So dollar weaker across its three major and four major partners here. Gold should have benefited a tad from that. Let's have a look at gold. We were along this last night as well. I don't know if I'll put this on. Put it on this chart. There we are. We were. Oh, it's actually reversed. Interestingly, well, actually, what's happened today? I haven't really looked at this today. We got long last night. Our stop loss is down here somewhere, isn't it? 28.60 or 28. This one, isn't it? 28.52. On an end of day basis. Let me show you the. If you haven't seen it, that was the long position we took. We didn't actually set a take profit last night. I was just trying to see if this is going to feed through from this move low. It's a bit of a sketchy one, so we'll see how that figures later on today. That gold long, but clearly what I was looking at here was clearly the 20-day is still in play here, and we didn't want to go under it, came back through it. So let's see if the next level might be down. So we might be sort of starting to roll over a bit, but we'll see again how that goes in, but certainly the all-time high is not that far away now at 29.54. So gold today, I don't know if you've been trading this today. Some of you said you were trading this today. Here on the hourly chart on this crossing strategy, it would have been last went along. It was there on that was last on the 2nd of March. It's been long ever since. In and out. That's a big bearish candle down though, but the 20's held. Break of the 20, that would take me out here on an intraday basis this morning. So that, I might have got in a bit late there, but obviously I'm looking at end of day basis, not hourly charts, but that's looking a bit wedgy shaped, isn't it? So now that's the lows, the highs are getting lower here. We're supported by the 20-hour moving average. So break of this wedge, we could go. Typically the distance traveled is this distance here, so we could move down here somewhere, or equally we break out to the upside, we could double that as well and have a go at 29.30 sort of zone here if that breaks. But anyway, you can see that 20 hours held there if you're trading that on the hourly basis. Like I said, guys, do let me know for whatever time frames you trade, whether you're a minute scalper or a tick trader. You don't use any of these indicators that this old guy has always had on his charts, or whatever the asset that you trade. Crypto, I haven't actually looked this morning. How's Billy Bitcoin doing? At under 90,000 this morning. Let me just have a quick look. We had this big old reverse yesterday, didn't we? Having the huge. Look at this asset, my friends. Sunday, yeehaw! Monday, ugh! Tuesday, okay. And Wednesday, we're actually up for the day, but under the key to at 92,000 level. There was that end of February. We talked about all this week, didn't we? There we are. 2025 low, 78,000 on the 28th. Trump then announces crypto over the weekend, and bingo in the strategic reserve. A lot of information missing there, as normal with Trump's major announcements. It's just the fact he hadn't said anything about crypto for weeks. Somebody probably had a little word in his ear over the weekend while he was swinging his golf clubs down in Mar-a-Lago. But so that had a rally. We immediately sold off completely yesterday, and that, my friends, is a very engulfing, but it's not very engulfing, but that's a negative pattern, given that we're under the 50-day moving average, which is now tipped down. See how it's gone from horizontal to edging lower. The 20 days already dipped. We've been under the 20 days, we said, for all of February. And into March, so over a month now under the 20-day moving average and sort of angling lower, but still clearly buyers down here. But clearly, before we breached 92, there was clearly buyers down at 92 as well. So a lot of messing about going on, courtesy of the president on Bitcoin and other cryptos. What will or will not be in the reserve, strategic reserve? What is it? How many have they already got? UK is supposed to have a few percent worth of cryptos as well. But anyway, so indexes, we were big sell-off yesterday from the bottom up. So the Dow, let's do the Americans ones first. So the Dow down here on the 3rd, we were down again yesterday, quite a significant decline. As I said, the cash was down 1.55%. looking for the cross now on the 20 and the 50-day moving average. Again, horizontal 50 moving average, no real direction over the last 50 days. Is that what that's telling us? We were down, we were up, so average is flat. Up for 20 days, down for 20 days, up for 20 days, and then we're rolling over. So, but as you can see, hopefully you can see that the significance of the clustering of the bigger negative candles here, starting here on the 20th, and then again here on that fateful Friday, where we bagged lots and lots of pips before I went away for a week, and then another big Friday. That was Monday, wasn't it? Monday sell-off, Tuesday follow-through, no Tuesday bounce, and Wednesday, woeful Wednesday, down again. So down we go for the Dow, the S&P 500, similar. And again, we've now, as I said earlier, as we said yesterday, we've already had the cross. So the Dow is outperforming the other two. We've had this significant 20 crossing from above to below the 50-day moving average here on Monday. Down Tuesday, down Wednesday again. Cash session doesn't start for 3 or 4 hours. Sorry, what we're talking about, it's 1:30. It starts at 2:00, doesn't it, here? So it's an hour away. And that intraday low yesterday took us to 57.40. 57.40 for the S&P 500. We haven't been that low. Just look to the left. We haven't been that low since the big rally here started at the beginning of November, 5th of November. What was that? That was election day, Tuesday, the 5th of November. And there we go. So all of Trump's gains for the stock market have not completely been wiped out, but are disappearing. So the Trump trade, has it finished? It's exuberance of cryptos and other, energy stocks and the sectors. Is it over? Well, certainly the combination of the earnings season coming to an end, the data being in, profits being bagged, and we're rolling over something for some weakness. But this is healthy and a very strong moving, trending market. We'll go up to the weekly. I've said this before, haven't I? It's still, it's weekly. There we are. It's still, still relatively consolidating highs, but that's it. This is our third. This is it. We're only into Wednesday, obviously. We still got all of the Wednesday session, Thursday and Friday to go, but we're into our third consecutive week lower here, having got under the key 6,000 level. So here you see it's clearly, and again, big down candle so far under the 20 period weekly moving average. So it's another negative week, which is potentially at the moment is looking bigger than the 2 previous negative weeks that kicked it off. So there could be some more weakness, and again, we might not find support until we're down here at 56.50, where the 50-day moving average is, and even that might be tested. I mean, obviously this could all turn around in the next 2 days. Who knows? But the trend is very much rolling over the world's most important stock market on a short-term basis. But you could still argue we're consolidating at highs here on that weekly time frame. Certainly the daily has been good to be short from that key breakdown we had on Friday and all of last week. So NASDAQ similarly. So NASDAQ 100 even more polarized, and there you can see the break took place here on the 20 at the end of February, and the distance between the 20 and the 50-day is expanding. So the rate of decline is increasing. See here on the MAC, you see that very nicely on the MACD lines as well. The size of the histogram is getting bigger. Yesterday's was as big as the day before, and so lots of volatility yesterday. We went all the way down here before we came back. If we go down to an hourly time frame for the NASDAQ, you saw how volatile it was yesterday. I didn't really demonstrate that very well here. So we went all the way down here into just after open at 20,000 was tested. There we are, 20,000 was tested, and then we recovered it all plus, and we ended up just down 0.35 of 1%, 0.35 of 1%. We closed, but we're still chuntering sideways at the moment on that. So stocks still being clobbered. Here in Europe, the DAX from its all-time high here. Let's go back to the daily time frame for this one. The DAX all-time high on Monday, shakeout Tuesday. We've bounced again here Wednesday into the all the way down to the 20-day moving average yesterday. Again, big volatile day for the DAX, closing negatively. But so far, that's been engulfed by today's action, price action, confirmation that the Germans, ramping up defense spending more. Obviously, bonds haven't to be issued, or sorry, government securities haven't been issued to pay for all of this spending. And all-time high looks like could be tested again. So DAX up for the day at the moment, and a crate. Similarly, across the English Channel in London, where I am, we're just shy of 8,800 again. At the moment, but again, all-time high here intraday, certainly on Friday. On Mondays we went over 8,900. We closed around just under that, and we were down yesterday, less volatile in the on the FTSE, but we're down a bit more significantly today on the FTSE in Europe. So look, the Trump, Canada, Mexico decision expect. Oh, okay, interesting. Look, Nick's just said Trump is expecting some sort of discussion with Canada, Mexico, some sort of decision. I'm not sure what he means by decision on that. I'll have to look into that later on. So we'll see. But anyway, stocks, you can see, are a bit glum on all of that. Over in Asia, we were also down. Much more really volatile yesterday. We were down into close, I think, if I remember rightly, on the but this CFD looks like it's moved up a bit. But again, another one shedding and moving quite significantly lower from these all-time highs over in Japan. Japan not in the immediate crosshairs, but certainly a major trading nation, and if tariffs are clamping international trade, Japan will suffer from that as well. But we'll see how far they go. Potentially much more significant than they were in 2018 when he first started. But yeah, we'll see. We'll see how they go through the course of the year. So there we go, my friends. Any questions about anything in particular? Let's go back to the. Let's go back to the majors, see what's happened. We're on our 2, yeah, so we're holding 107, still 12 points at the moment. We're looking at a 2-minute chart, weren't we, from the data? So where was the data? It was here, wasn't it? So yeah, we talked about having the stop loss down here, didn't we? So yeah, we're still retraced, but we're still in the money. We're still in the money. Thanks very much. So that's our entry. We still haven't broken under the second moving average, so just keep trailing that up. Our stop loss, I'd have my stop loss around about here now. As a 2-minute trader, 107.08. Actually, we got to our first target, didn't we? So I'd have taken some profit on that. That's what we were talking about, weren't we? We were talking about the first target was the pre-news high here. You can see whether we got a big overbought situation for RSI. We got a cross here as we came down quite aggressively, so that was a big resistance area. So yeah, I'd have taken some profit there initially. And did we actually get to the other area we were talking about? Let's have a look. Just put that on. That was our hang on a minute. Was the high for the day we were chatting about was up here, wasn't it? 107.20. Yeah, it was a bit too high. 17 was the next one there. So we got to our 2 targets. Okay, I'll be quite happy with that. Target 1, target 2. Now it's retracing. Obviously, the daily high. This is your next. If you're still trading this long, guys, that looks like it might be a step too far. Today's high, but that should have been. If you're trading on an intraday basis, obviously around the news, you need to know what was happening beforehand. We've been biased we've been biased positive all day for euro dollar. So we're looking to take long positions rather than short positions, and that's played out quite nicely, hasn't it? Those, if you were here at the beginning, that's what we were talking about. Stop loss down here at the 50, just under this 107. That's now at the 107 level. So we got in here, a bit of a retrace, and but we're in the money. Got to target 1 that we'd set here at 107.12. This first high, pre-high, and then that 17 area. In fact, that's 18, but yeah, we talked about 107.17 here. So there's a pips in the bag on that trading the news move as well. And again, as you saw, some people wonder about, well, I really want to trade the news immediately on a 1 minute chart or on the tick chart. That's all well and good, fine. However, it's not allowed on most of our challenges, and I would argue that's a more conservative and a more sensible way of trading. So the news was negative. The trend has been up all day, so we go with the trend. See how the markets absorb the news. Well, it was positive, wasn't it? It was positive or negative dollar negative positive for this particular asset, which euro dollar. Immediate positivity, bit of a retrace, but we didn't break our key moving average, the 20 period, the blue one, the red one, I should say, and off we've gone again, and then we've broken to the new high here on here. We've cooled again. So is this another leg? Are we going to get to the new this 107.21.7, which is our current high of the day? We'll see. But keep your stop loss moving up, bag the pips. If it turns around and takes you out, so be it. Wait for the next one. That's what it's all about, trading, my friends. If you're not with us, I don't know why you're not. It's very straightforward, trading with the proptrade.com. We've got lots of platforms. Sorry, not lots of platforms. We've got lots of opportunities to get into the trading with a very small amount. That's the beauty of the proptrade.com. You can exercise your $50, your $100, your $300, whatever it is you've got, and take it at a much bigger account. So he funded 5 million. So standard challenge, the 2-step is the normal phase. If you want a quick express step, it's the targets are a bit more aggressive. But look, a $50,000 account, $350. And at the moment, if you're new to us, we're offering a 25% discount off that. So that brings that down to like 260 something. I was doing the maths off the top of my head, I think, doesn't it? Yeah, 25%. Yeah, something like that. I can't remember, but a $50,000 account, that's massive. Some of them, the forex accounts I've been trading, very rarely get a start that big. But yeah, 25,000 as some people ask me, what's a good size of a trading account? I'm not really allowed to tell you in that from a compliance point of view, but 25, 30, 50,000. That's just, you don't want anything much bigger than that when you're trading forex, but anything less than that as well, you might rule out sort of the taking the more exotic trades. But anyway, that's something for more experienced traders. But anyway, the point being is, with a prop trade approach, you can make real money once you've proved yourself as a disciplined and successful and consistent trader. So if you're hitting 10%, you get to your second phase. Hit 5% profit target without having a 10% loss, you get a funded account. You get a $25,000 funded account. All of this from about $160 with the 25% discount if you're new. So if you put in here new 25, that will get you a 25% discount off that initial investment, and then you can get it refunded as well if you're successful with your funded account. So once you've got the funded account, the $25,000, rules are still the same. You've only got there's no profit target, obviously, because it's money there to be traded, and you can be paid weekly once you've made funds. Obviously trading, be aware it's obviously the rules. There's rules like with anything. Like with anything in life, isn't there, guys? I mean, some people I see on some of the Discord groups complaining about different prop firms and there are the scammers, and there are scammers out there, undoubtedly. But you wouldn't get in a motor car without doing some and try to drive without doing some research. And it's down to you. We're all grown ups here, and it's all about money. So don't let the money get in front of you, and focus on doing what you do well. That's what all good traders do. They focus on the process rather than actually worrying about how much money they're going to make today. The professionals turn that completely on their head. They worry about and concentrate on how much money they might lose today. They forget about the winning. The winning comes along by having a good process and following your strategy and following your process over days, weeks, months, years. And always keep their losing trades small and just accepting it emotionally. Don't get too hung up when you do lose. But anyway, leave you on a positive note. You know, you get a funded account, you get your $25,000 funded account, you make some profits, and 80% of those profits, or starting from 80% of those profits, can be yours. You know, real money, real live dollars. So, as I say, if you're not with us, come and join us, and we'd love to have you. We'd love to help you, because if you're successful, we're successful. So let me just leave you with today's not CME. Where's the calendar gone? Today, well, actually, I'll go back to Forex Factory calendar or calendar. Next big news, guys. 3 o'clock in an hour and 45 minutes. We got the services PMIs. 52.8 last time. 52.5 is expected to slip a bit. Anything between those two would be really positive. Anything better than 52.5 will be significantly positive. Anything better than last time would be a big surprise. You know, we've had mixed data across other parts of the world today, so let's see what that looks like. A leader of that is the final reading 15 minutes before that, but this is the most important one, the one at 3 o'clock this afternoon, 1500 hours GMT, Universal Standard Time. So thank you for your time. It's great to see you. We'll be back again tomorrow. Tomorrow's Thursday, 6th. It's Euro ECB. Expected to cut the financing rate by 25 basis points. We'll see you again at 1 o'clock tomorrow. See how the euro moves on the back of that. Claims, weekly claims, 244,000. Remember, big jump up last week. And then Miss Lagarde and the gang from Frankfurt in the press conference at 1:45. So take care, stay safe, and may the pips be with you, my friends. All the very best. Bye-bye.